Here's something that'll blow your mind. The difference between traders who consistently lose money and those who build lasting wealth isn't what you think it is. It's not some secret indicator. It's not having more capital. The real difference comes down to 7 fundamental lessons that most traders never learn. Today, I'm going to share exactly what those lessons are and why they completely transform my approach to the markets. These aren't theoretical concepts from some textbook. These are battle-tested principles that took me from blowing account after account to building sustainable income from trading. Before we dive in, let me paint you a picture of where I started. Picture this: a trader sitting in front of multiple monitors, frantically switching between charts, constantly refreshing social media to see what everyone else was doing. Sound familiar? That was me for the first 3 years of my trading journey. I was that guy who thought more information meant better results. I was convinced that if I could just find the right combination of indicators, the perfect time frame, or the next hot stock pick from Twitter, everything would click. I burned through account after account. Not small amounts either. We're talking serious money that I couldn't afford to lose. Money that was supposed to pay rent. Money that was meant for groceries. Money that represented months of saving from my regular job. All gone because I didn't understand what actually moves markets and what actually creates consistent profits. The worst part wasn't even the financial losses. It was the psychological toll, the constant second guessing, the sleepless nights replaying trades that went wrong, the overwhelming feeling that maybe I just wasn't cut out for this game. Every successful trader I followed online seemed to have some magical ability that I was missing. But here's what changed everything. Instead of continuing to chase the next shiny strategy or the next guru's course, I started studying my own behavior. I began tracking not just my wins and losses, but the patterns behind them. What was I doing during my profitable periods? What habits led to my biggest disasters? What beliefs about the market were actually holding me back? That's when I discovered these 7 lessons. They weren't hidden in some expensive course or locked away in exclusive trading communities. They were hiding in plain sight, disguised as boring fundamentals that most traders overlook because they're searching for something more exciting. The first lesson completely shattered my understanding of what it means to be active in the markets. For years, I believed that successful trading meant constant action. More trades equals more opportunities, right? Wrong. Dead wrong. The most profitable traders I studied were doing the exact opposite of what I expected. They were sitting still. They were waiting. They were letting opportunities come to them instead of desperately hunting for them. This revelation led me to examine every aspect of my trading approach: how I viewed risk, how I handled emotions, how I prepared for each trading session, how I managed my capital, how I dealt with losses, how I celebrated wins, how I maintained consistency over time. What emerged was a framework that had nothing to do with predicting market direction and everything to do with managing probability and controlling what I could actually control. These 7 lessons became the foundation of my entire trading philosophy. They guided every decision, every trade, every moment of doubt. The beautiful thing about these lessons is that they're universal. Whether you're trading stocks, forex, crypto, or futures, whether you're scalping for minutes or holding for weeks, whether you have $1,000 or $100,000, these principles remain constant. They're based on market psychology and human nature, which never changes. Over the next several minutes, I'm going to walk you through each lesson in detail. I'll explain not just what they are, but why they work, how to implement them, and most importantly, how they'll transform your relationship with the markets. By the end of this breakdown, you'll understand why most traders fail and exactly what separates the consistent winners from everyone else. These lessons saved my trading career. More than that, they gave me the confidence to approach markets with a clear plan and unwavering discipline. The second lesson hit me like a freight train, and it's about something every trader experiences but nobody talks about honestly. Losing streaks are not anomalies. They're not signs that your system is broken. They're not evidence that you should abandon your approach and start over. Losing streaks are mathematical certainties. When I finally understood this, everything changed. I stopped panicking after 3 losses in a row. I stopped tweaking my strategy after a bad week. I stopped questioning my entire approach every time the market humbled me. Because here's what the data reveals. Even with a 70% win rate, you can still experience 5, 6, even 7 consecutive losses. It's not just possible, it's inevitable. Most traders prepare for individual losses, but they never prepare for streaks. They'll risk 2% per trade thinking they're being conservative, but they never calculate what happens when they hit that inevitable string of losses. They never ask themselves, can my account survive 8 losses in a row? Can my psychology handle it? Can my confidence recover? This leads directly to lesson 3, which revolves around something I call position sizing psychology. The amount you risk per trade doesn't just affect your account balance, it affects your decision-making process, your sleep quality, your ability to follow your rules, and ultimately your long-term success in the markets. I learned this the hard way when I turned $10,000 into over $60,000 in less than 2 weeks. Sounds amazing, right? It was a disaster. Because I was risking massive amounts per trade, I developed terrible habits. I started believing I was invincible. I began taking setups that barely met my criteria because the previous wins had inflated my ego and distorted my risk perception. Within 3 days, I gave back everything, every single dollar. Not because my strategy stopped working, but because my position sizing had corrupted my judgment. The money felt easy because I was risking so much that small movements created huge profits. But those same small movements in the wrong direction created catastrophic losses. The lesson isn't just about risking 1 to 3% per trade. It's about risking an amount that keeps you emotionally neutral. An amount that allows you to execute your plan regardless of whether the trade wins or loses. An amount that doesn't make you check your phone every 5 minutes or lose sleep at night. Lesson 4 completely transformed how I view market analysis. For years, I was obsessed with being right about market direction. I would spend hours analyzing charts, reading news, studying economic reports, trying to predict what would happen next. I thought successful trading meant having a crystal ball. These 7 lessons transformed my trading from a gambling addiction into a professional business. Stop chasing the next strategy. Stop looking for shortcuts. Master your psychology, respect your risk management, and build a system you can trust. The market will always be there, but your capital won't if you keep ignoring these fundamentals.